from a streamer frustratedly kicking her screen after making a bad entry, to another one getting rugged by following the wrong signals. These are some of the awful trading strategies from across the internet, starting with this guy who literally lost a staggering 60,000 Indian rupees simply because of his poor strategies. That's why predicting the market is so important. But the next guy made an even bigger mistake by making the wrong prediction. Watching the market in a downtrend, he took a shot at selling his trades and ended up losing everything at once. Now, look at this next guy, rushing in and out of trades while chasing the market's wild moves. And just like that, he ended up losing a staggering $2,000 in a day trade. In trading, understanding the market is the most important thing. You can't just jump in and start buying and selling without making a clear observation. Lesson well learned. But the next guy seemed to have zero knowledge about the market, as he was seen selling when the market went up.
We still have like almost 40 minutes for this 1 hour candle to play out. So it's either it's gonna reverse
and NYC soon.
After losing nearly $1,000, this time he decided to buy instead of sell.
Exit and flip to buy, that will be kind of revenge, and I don't think I'm gonna do it. Done. Dude,
Yo,
that's 100 pips, man.
Yo, 100.
But things backfired and he faced an even bigger loss this time as the market suddenly crashed. That's why having a straddle is important. For those who don't know, a straddle is when you place two bets. One that predicts the price will go up, and one that predicts it will go down. If the stock jumps high or falls sharply, you win. But if nothing significant happens, you lose money. It's like buying a raincoat and sunglasses at the same time. You only end up using one. However, the next person dug an even deeper hole by trading Forex during high volatility. But little did she know what was coming next. And this is why due diligence is a must while trading, because trading is risky and guessing isn't smart. But when you take time to learn and check things first, it helps you stay away from scams, lose less money, and make better choices. Now take a look at this guy who was teaching how the false break strategy works.
What you're looking for is number one, the market to be in an uptrend. You can see this market is in an uptrend. Next, you want it to retest an area of value, and what we have over here is previous support, right? Previous resistance which became support and possibly could retest at support over here again. What we are looking for is for actually the price to actually retest these lows. We want the price to retest these lows, right? To get rejected and to close back up above support.
And he showed how it works in trading.
You can see the price here retest support, and then on this next candle it actually closed back up above support. What this tells you is that the sellers tried to take the price lower, tried to break below these lows but couldn't hit down lower. Instead, the buyers step in and push the price up higher. What they can do is to enter on the next candle open.
Even though it looked pretty solid, things don't always work exactly like that. The false break strategy doesn't work well because it's hard to tell if a breakout is real or fake. Prices move fast, so even if you're right, you might act too late. The strategy also relies too much on guessing instead of using clear signals. Most tests show it loses more than it wins. It only works sometimes, and that makes it risky. A lot of people on the internet actually lose money this way, just like this next guy who didn't take time to observe the market trends and traded against them. And just when the candles took a dive, he started buying, which only brought sorry to him in the end. That's why good long-term market observation is a must in any kind of trading. But the next guy seemed like a true pro at trading as he observed the market for over 4 hours following the consumer's price index signals.
We're looking at here. So I'm going to pull up my dollar-yen trade so you guys can see if I get stopped out of my trade here or not. Here's a 4-hour view of the dollar-yen. So what you've got here is you've got 20 seconds, and this is the USD.
But even after observing the market for hours, he ended up making a record by losing all his money in just a few seconds.
JPY. Okay, so there we go. Number is out, and we have the S&P 500 flying. Look at that. I'm going to get stopped out real quick on that one. USD JPY not going my way.
The only thing he was missing was a hedge. For those who don't know, hedging means making a second trade to help protect your first one. It's kind of like buying insurance for your money. As a result, if your main trade goes the wrong way, the hedge can help cover some of the loss. This matters because trading is risky, and prices can change very quickly. Hedging helps keep your losses smaller so you don't lose too much all at once. Unlike the previous guy, this one tried to bounce back while the market was moving consistently.
Alright, I'm in a trade right now on GU. This is a short and M1. Let's see what we get today.
But even after seeing the market going up, he tried to be oversmart by selling against the trend, hoping to earn more this time.
Oof. Okay, that was rude.
And just like that, he ended up losing $1,000 in the end. Lesson learned: never trade against the trend, follow the trend. Now watch this guy who tried to be oversmart by selling his trades during the downtrend.
I entered a sell position right here, and we're gonna wait till that play out, and we're gonna see how that go. Now, I'm not gonna lie, it may not do what it's supposed to do, but it's okay.
But sadly, the market started to go up, and just like that, he lost everything.
Since left, I'm in the negative, $43.62. And yeah, that's what we got going on right now. I mean, one day it's gonna be different though.
Just like him, the next guy also used the same method of pre-assuming the market while doing gold trade with high volatility.
It's gonna be an early day. If this wins, GG's. If this loses, and that's me done for today. Okay, right now it's not looking too promising.
Even though he reached his selling limit, he still didn't buy, thinking the market might go down. But the reality turned out to be very different.
We couldn't even close below the other candle, so we need that to happen right now, or we'll probably could. Yeah, it's not looking too promising. We get a good rejection. Nice. Yeah, no, I don't think it's gonna happen.
And that's how he ended up losing approximately $900 in a single day. However, the next guy right here didn't even realize that his trade had a risk management level of 4%, which is quite high.
Alright, in. Right,
Yeah.
I'm in. Oh, strong push. Strong push, guys.
This high risk management actually cost them heavily in the end, as they lost a staggering $4,000 in a single trade. They lost it all due to poor risk management. Risking 4% per trade is too aggressive, especially for beginners. For example, with a $1,000 account, losing 3 trades at 4% risk means a $120 loss, over 10% of the account gone in no time. But this wasn't the only time these guys dealt with big numbers. In the next trade, they actually got lucky and won a lot of money.
48.5 can be a big win.
The key level.
I don't forget. Alright, you flip
Lang.
all the way up, sir.
Lang.
Win.
But these guys got greedy and didn't close their trades even after making a profit, and ended up losing everything when the market took a deep dive.
Oh, another push. I'm gonna be. Oh shit! I put out. Oh no.
Bro.
Too early.
Funny, bro.
Didn't manage to do that.
Even after losing consecutive trades, these guys took one last shot by going against the market, hoping for a comeback.
Some rejections, double rejections. Yeah. So we shall see. I'm in since 45.5.
Although the market was in a downtrend, they didn't hit the stop loss and kept buying instead of selling, which ultimately led to their downfall.
Bam. Another day.
But that's nothing compared to this next guy who even got rug pulled by following the wrong CPI news. Now watch this guy who made a successful trade of nearly $2,000.
Slightly big today, 30 points, so and goes well. On the verge of 5-minute flipping, so let's put it here. Okay, another drop. Right, I'm securing 80% here.
But the joy ended quickly as the market fluctuated and he wasn't able to sell at the right time.
I feel better right now, you know, after being sick and all this prop firm drama. At least something here.
And in the end, he lost half of what he had initially earned in just a few seconds. Even after taking multiple losses before, this time these guys thought they'd finally make money watching uptrend in the candles.
Oh, okay, let's go.
No fucking way.
I'm closing 80% here, guys.
And seeing the potential, he even raised the buying limit this time, hoping the numbers would grow.
Yeah. I just closed like...
But dude, just few points away. This is crazy, bro.
But the market didn't go as they expected, and once again, it was the same result on a different day. Another loss. However, they aren't the only ones who misread the market. The next clip shows another guy who sold his trades, expecting a potential downtrend in the market. But the market actually moved in the opposite direction, and he kept losing consistently. Now watch this guy who's sharing a tutorial on how he profited by following the consumer price index.
It gives me or gets me there. I'll just close my trades. So CPI, it is a buy of 6 positions. So let's see how it's going to play out. Yes, we are locked in, and few seconds to the news, and boom, it's a buy.
Even though he did make some profit, that's just an exception, not an example. In real life, trading based on CPI is extremely risky. When CPI news is released, big investors and trading bots react within milliseconds, causing prices to move fast and unpredictably. Even if your idea makes sense, you might guess wrong and lose money, as the market can reverse direction in a matter of seconds. Just like this next trader who followed the consumer price index and assumed the market would go into an uptrend. And just like that, the market crashed and turned into his worst nightmare. His inexperience and lack of knowledge were enough to ruin his day, just like the next guy who had no idea how the market works, and it cost him heavily in the end.
To be honest, I don't really know what I'm doing. I've never done this before. Rugged. What are you talking about, bro? I'm not a rugged. Watch, I'm not gonna do nothing.
Out of frustration, he suddenly ended the stream.
Hold on. Wait, let me...
And if you like this video, then you might like a similar one on the left or my newest upload on the right.